Imagine you've got $100,000 just sitting in your bank account, barely earning a thing. Now you could let it stay there, collecting a few pennies in interest, or you could put it to work for you. But what's the best way to do that without spending countless hours glued to stock charts? Today, we're diving into a strategy that doesn't just aim for small gains. We're talking about a potential to turn that $100,000 into something extraordinary. Yes, possibly millions. In this video, I'm going to walk you through the 5 top-performing Fidelity Index Funds that can transform your portfolio over time. These aren't just any funds. They're carefully selected based on growth potential, dividend yield, stability, and performance across different sectors. Stay with me, and by the end of this video, you'll not only understand how to make your money grow, but you'll also have the confidence to take action, knowing that you've chosen the best Fidelity funds for your financial goals. Before diving into each specific Fidelity Index Fund, let's discuss what really matters when choosing the right investment. Picking a fund simply because it boasts high returns isn't enough. Instead, a smart investment strategy involves considering 4 key factors: growth potential, dividend yield, sector performance, and long-term stability. If you're ready to grow your wealth, don't forget to like, subscribe, leave a comment with your thoughts, and hit the bell icon so you never miss an update. Let's start with Fidelity Index Fund number 5, Consumer Staples, FSTA. Let's kick things off with Fidelity's Consumer Staples Index Fund, ticker symbol FSTA, a solid choice for anyone prioritizing stability and consistent growth. Currently priced at $49 per share, FSTA offers a low expense ratio of just 0.08%, which means more of your money goes toward growth rather than fees. Plus, with a dividend yield of 2.44%, it delivers steady income, making it an attractive option for conservative investors. Now, let's talk about FSTA's top holdings. This fund is dominated by some of the most recognized names in consumer staples. The Procter & Gamble Company, PG, leads the pack with 12.6%, followed closely by Costco Wholesale Corporation, COST, at 12.14%, and Walmart Inc. RWMT at 10.98%. These companies produce products that consumers rely on every day, from household essentials to personal care items. Think of the strength behind brands like Coca-Cola, KO, and PepsiCo, PEP, which round out the portfolio's top holdings, creating a lineup that's resilient even in economic downturns. What's more, FSTA is heavily weighted in the consumer defensive sector, 98.36%, which thrives during market volatility because people continue to buy essentials no matter the economic climate. With a beta of 0.61, FSTA is less volatile than the overall market, meaning it provides a smoother ride through market ups and downs. Performance-wise, FSTA holds up impressively, with a 9.95% year-to-date return and a 17% return over the past year. Zooming out further, it has returned 36% over the past 5 years, illustrating its potential to steadily grow your portfolio without extreme risk. In short, FSTA offers stability, a steady dividend yield, and exposure to industry leaders like Procter & Gamble, Costco, and Walmart. This fund is ideal for investors looking to grow their wealth conservatively over time, while also securing a bit of income along the way. With an initial investment of $100,000 growing at an average annual return of 6.34%, plus a 2.44% dividend yield, reinvested, your portfolio could grow to approximately $232,001. Within this total, the dividends alone would contribute around $57,652 if reinvested. After 20 years, the investment could grow to around $538,246. Out of this, reinvested dividends would contribute approximately $179,973, showing the power of long-term compounding. Holding for 30 years, your investment could reach approximately $1,248,739. Reinvested dividends over this period would add about $426,161, highlighting the value of staying invested and reinvesting earnings for exponential growth. Fidelity Index Fund number 4, Consumer Discretionary, FDIS. Next up is the Fidelity Consumer Discretionary Index Fund, FDIS, currently priced at $87 per share. With net assets of $1.78 billion and an expense ratio of just 0.08%, FDIS is an affordable way to gain exposure to sectors that thrive in a growing economy. This fund focuses on the consumer discretionary sector, which includes companies providing non-essential goods and services, from luxury goods to dining out, areas that tend to perform well when the economy is strong. FDIS also offers a modest dividend yield of 0.76%, paying 66 cents per share annually through quarterly dividends. Although this isn't a high-yield dividend fund, it's structured to capture growth from companies that stand to benefit as consumer spending rises. Its 12% year-to-date return and 25% return over the past year showcase how well this fund has performed in recent times. Over the last 5 years, FDIS has returned an impressive 90%, highlighting the high growth potential within this sector. Now, let's break down the top holdings, which make up 57.82% of the fund's total assets. Leading the pack is Amazon.com at 21.89%, a giant in e-commerce and a cornerstone in consumer discretionary spending. Following Amazon, Tesla holds 12.67%, capitalizing on the surge in electric vehicle demand. The Home Depot is next with 6.73%, reflecting the strength of home improvement trends. Other major players include McDonald's Corporation, Lowe's, Booking Holdings, the TJX companies, and Starbucks, companies that appeal to consumers' varied preferences, from fast food to travel to retail. Sector-wise, FDIS is heavily concentrated in consumer cyclical, 96.11%, with minor allocations in industrials, 0.93%, technology, 0.92%, and communication services, 0.77%. This high concentration in consumer discretionary goods allows FDIS to excel during economic expansions, making it an ideal pick for investors looking to capitalize on growth in consumer spending. With a $100,000 investment in FDIS, with average annual return of approximately 13.7% rate plus a 0.76% reinvested dividend yield, the portfolio could grow to approximately $368,946 over 10 years. Out of this, reinvested dividends would contribute about $7,865. After 20 years, your investment could grow to approximately $1,320,144. Reinvested dividends alone would add around $16,349. If held for 30 years, the initial $100,000 investment could potentially reach $4,733,256. Here, reinvested dividends would contribute about $25,500, demonstrating the effect of compounding returns and the added boost from dividend reinvestment over the long term. Fidelity Index Fund number 3, Healthcare Sector, FHLC. Now, let's dive into the Fidelity Healthcare Sector Index Fund, FHLC, currently priced at $70 per share with net assets of $2.99 billion. This fund offers exposure to one of the most resilient and essential sectors, healthcare, with an expense ratio of only 0.08% and a dividend yield of 1.36%, which paid $0.95 per share in the past year. FHLC provides both growth and income, making it an attractive choice for balanced investors. FHLC's year-to-date return is 6%, and it delivered 17% over the past year. Over the last 5 years, it has achieved a 53% return, showing the long-term growth potential of healthcare investments. This fund is particularly appealing for those looking to add stability to their portfolio, as healthcare demand remains consistent through various economic conditions. Top holdings make up a significant portion of the fund, with 362 different assets across various healthcare industries. Leading the pack is Eli Lilly and Company, which holds 10.96% of the total assets, followed by United Health Group at 8.28%, and Johnson & Johnson at 6.00%. Other major companies like AbbVie, Merck, Thermo Fisher Scientific, and Abbott Laboratories are also part of the top holdings, representing key players in pharmaceuticals, medical devices, and biotechnology. Sector allocation is heavily concentrated, with 99.86% in healthcare. There's a very minor allocation in financial services, 0.05%, consumer defensive, 0.04%, and industrials, 0.04%, giving it a focused yet diversified approach within healthcare. This focus on healthcare makes FHLC a strong defensive choice, as healthcare companies often continue to perform even in economic downturns due to the essential nature of their services. With an initial $100,000 investment in FHLC, with average annual return of approximately 8.88% plus a 1.36% reinvested dividend yield, the portfolio could grow to approximately $248,606 over 10 years. Of this, reinvested dividends would contribute about $14,463. After 20 years, your investment could grow to approximately $579,248. Here, reinvested dividends would add around $31,018 to the total value. If held for 30 years, the initial $100,000 could potentially grow to $1,333,608. Within this total, reinvested dividends would contribute around $49,968. Fidelity Index Fund Number 2. NASDAQ Composite, 1AQ. Moving on, we have the Fidelity NASDAQ Composite Index ETF, ONEQ, an excellent choice for tech-focused investors. Currently priced at $71 per share with net assets of $6.9 billion, ONEQ offers exposure to the tech-driven NASDAQ Composite. This fund carries an expense ratio of 0.21%, which is a bit higher than some others, but it's well worth it for those seeking access to high-growth sectors. ONEQ has delivered impressive returns, showcasing a 23% year-to-date increase and 35% return over the past year. Over the past 5 years, ONEQ achieved a whopping 118% return, making it a strong candidate for investors who believe in the transformative power of tech and innovation. While ONEQ isn't a high-yield dividend fund, it does offer a modest dividend yield of 0.61%, with an annual dividend of $0.45 per share. Though this dividend is small, ONEQ is all about capital appreciation, driven by high-growth sectors and companies. Top holdings in ONEQ make up a diverse and powerful portfolio. Microsoft, 10.89%, and Nvidia, 10.14%, lead the fund, with Amazon, 6.66%, Meta Platforms, 4.25%, and Alphabet, 3.31% and 3.18% following. These tech giants are recognized for driving innovation and are the primary engines of growth in ONEQ. Other holdings like Broadcom and Apple add to its tech-heavy portfolio. Sector allocation is primarily in technology, 51.26%, with significant weight in communication services, 14.63%, and consumer cyclical, 13.62%. The fund also includes minor holdings in healthcare, 6.63%, and financial services, 3.63%, providing a bit of diversification. This sector mix positions ONEQ to benefit not only from the growth of tech, but also from consumer spending and healthcare advancements. With 999 holdings across various sectors, ONEQ gives investors broad exposure to the NASDAQ, a key driver of global market performance. This makes it ideal for those with a long-term vision who are prepared to hold through market cycles, betting on the tech and growth sectors that power the NASDAQ. With an initial $100,000 investment in ONEQ, with average annual return of approximately 16.87% plus a 0.61% reinvested dividend yield, your portfolio could grow to approximately $481,639 over 10 years. Within this total, reinvested dividends would contribute around $6,270. If held for 20 years, your investment could grow to approximately $2,272,686. Of this, reinvested dividends would add about $12,934. After 30 years, the initial $100,000 could potentially reach $10,762,167. Here, reinvested dividends alone would contribute around $20,015, showing the strong impact of long-term compounding, particularly with high-growth funds like NASDAQ Fidelity Index Fund No. 1, Information Technology, FTEC. Finally, we reach our top pick, the Fidelity Information Technology Index Fund, FTEC, a powerhouse for anyone who believes in the transformative potential of tech. Currently priced at $174 per share with net assets of $12 billion, FTEC offers exposure to the dynamic tech sector at a very low expense ratio of 0.08%. This fund captures the energy of tech growth with a dividend yield of 0.65% and a $1.13 annual dividend per share, providing a modest income stream alongside potential capital appreciation. FTEC has delivered impressive returns, with a 24% year-to-date return and 37% over the past year. Over the last 5 years, FTEC has returned a massive 160%, showcasing its robust growth potential. This kind of performance makes it ideal for investors with a long-term outlook who are prepared to ride the tech wave. Top holdings in FTEC reveal the major players driving innovation. Apple, 15.85%, Nvidia, 14.04%, and Microsoft, 14.02%, form the backbone of the fund, with additional holdings in Broadcom, 4.62%, Oracle, 1.81%, Salesforce, 1.79%, AMD, 1.74%. These companies are industry leaders in areas like semiconductors, software, and cloud computing, ensuring that FTEC is well positioned to benefit from tech advancements across a wide range of subsectors. FTEC's sector allocation is heavily concentrated in technology, 98.56%, with minimal exposure to industrials, 0.38%, financials, 0.37%, and basic materials, 0.32%. This focus on tech gives FTEC the potential for significant capital gains, though it also means the fund is more sensitive to fluctuations in the tech sector. With 294 holdings, FTEC provides broad exposure to tech without compromising on quality. This fund is perfect for those who are confident in the long-term growth of the technology sector and want to capitalize on the industry's rapid advancements. With an initial $100,000 investment in FTEC, with average annual return of approximately 21.06% plus a 0.65% reinvested dividend yield, your portfolio could grow to approximately $682,787 over 10 years. Of this total, reinvested dividends would contribute around $6,693. If held for 20 years, your investment could grow to approximately $4,584,858. Within this amount, reinvested dividends would add about $13,835. After 30 years, the initial $100,000 could potentially grow to $30,925,838. Here, reinvested dividends alone would contribute around $21,454, showcasing the exceptional impact of long-term growth and compounding dividends in a high-growth sector like technology. Ready to start growing your wealth with confidence? Imagine turning your financial dreams into reality by making smart, informed investments today. If these Fidelity Index funds caught your eye, dive deeper and see how they could fit into your strategy. And don't forget, subscribe to our channel for more insights that make investing approachable and exciting. Hit the notification bell so you'll be the first to know about the latest tips to maximize your portfolio's potential. Take charge of your financial journey, one investment at a time. Let's grow together. This video is for informational purposes only and does not constitute financial advice. Always consult a financial advisor to determine the best investment strategy for your unique situation.